Hey guys, welcome to Finstocks Academy. Today we'll be learning about price action trading and candlestick patterns. So candlestick patterns can be divided into three types: single candlestick patterns, two candlestick patterns, and three candlestick patterns. Today in this video we'll be learning about single candlestick patterns. So you all can see that there is a PDF that I'll be showing all to you. So this PDF is named as the Subtle Art of Candlestick Trading, and it is designed by me. So welcome to Finstocks Academy, and today we'll be learning about the basics of this course, that is single candlestick patterns. Here are the preface and the disclaimer that is written by me, and here the content. So one by one we'll covering the topics. Today this video I'll be covering all these single candlestick patterns. So you can see bullish Marubozu, bearish Marubozu, spinning top, doji patterns, what is hammer, what is hanging man, shooting star, inverted hammer, everything. In the part 2 of this video or this episode, we'll be learning about the two candlestick patterns, and they are on the three candlestick patterns and everything else. And after completing this whole course, I'll be sharing the PDF with you all in the description also, so that you can get access of learning these candlestick patterns in a much better way. So starting with the basics, what is a candlestick pattern, or what is a candlestick? So candlestick shows price movement in a fixed time period, as simple as that. So what is a candlestick? It shows the price movement in the market in a fixed time period. The time period can vary from 1 second to 1 day, 1 month, 1 year, anything. Okay, 3 minutes, 5 minutes, 1 hour, 1 day, 1 month. It varies from the type of trading that we are doing. If someone is doing a positional trading or a long-term trading, then they will use bigger time frames. If someone is doing intraday or swing trading, then they will use shorter time frames, and that's how it works. So whenever price increases from a particular point in the market, from a particular price in the market, for example, the price increases from rupees 5 to rupees 10, the candlestick will give a green signal. Okay, it will form a green candlestick pattern. And if the market moves below a certain price point, so it will give a red candlestick pattern or a bearish signal. So if a particular candlestick pattern is formed during an uptrend, then it is considered bearish. And if a particular candlestick pattern is formed in the downtrend, then it is considered bullish, irrespective of the color. So as I have mentioned, that whenever the price increases or decreases, on the base of that, the candlestick patterns are formed, and not on the base of uptrend or downtrend. Okay, so central body of is basically rectangular in shape and connects the opening and closing price. And there you can see these two parts, right? So I'll show you this portion, and this portion. Okay, so these are known as shadows or wicks. This shows that how much the price have gone up or down, and what are the strength of the buyers and sellers. I will explain this to you. So first, coming to the bullish candle. Okay, so if you're looking for a bullish candle, then the body is same for both the candles. The price opens from here, say rupees 100, okay, and closes at rupees, say 110. So the point from where the price is starting to move up is known as the open, and the point where the price finally closes is known as the close. Okay, so what is this high and low? High is the point where the price reaches to its maximum. For example, after starting from rupees 100, the price has reached till 115, but the sellers became strong and they pushed down the price to 110. Okay, like from 115 it came to 110. Now for example, what is this low point? Let me mark. I'm writing here rupees 100, and for here it is 110. Okay, and then here 115, and below it is, for example, say 90. Okay, so when the price came below, like for example it came to 90, but the buyers became strong here and they pushed up the price to here. Okay, so how it works, This is for a bullish candle. The same but a little different for a bearish candle. For example, the price started from here. Okay, the market started from here, say 100, and the price closed at say 90. Okay, so let's consider the high as 110. That means the buyers have pushed the price to 110, but the sellers became active here and they pushed down the price to 100. And for example, say the low became what to say 80. Okay, that means the sellers, the buyers become strong here, and sorry, excuse me, the here the like for example, the sellers become strong and they push down the price to 100, and here's the buyer becomes strong and they pushed up the price to 90. Okay, so here it's clear. So next, coming to single candlestick patterns. Okay, so first, the single candlestick pattern that we'll study is a bullish Marubozu. So what is a bullish Marubozu? A bullish Marubozu shows that the stock has such strong buying demand that market players were willing to purchase it at every price point throughout the day, causing the stock to close to its day's high. Basically, it means it has no shadows. First of all, you see here are no shadows present. Okay, here are no shadows, neither in up nor down. And if also there is some shadow or some wick, then it will be very less or very like negligible wicks present. So this shows a major bullish or a bearish movement. Okay, these are usually shown by high volumes in the market, and whenever this type of candlesticks are formed, it shows strong bullish or strong bearish movement. Because there are no wicks present, means there are no extra buyers or sellers that are trying to push up or push down the price. Candlesticks with no upper or lower wicks indicating strong trend. Here at for bullish Marubozu, you can see open equals high and close equals low, because as you can see there is no separate high or low for these candlestick patterns. So open is equals to high and close equals to low. Clean buying candle started moving up from opening level and closed at the highest point. These were bullish Marubozu. And coming to bearish Marubozu, open equals high and close equals low. As you can see that there is no separate fix, so it's a clear selling candle and started moving down from open and closed at the lowest point. So I hope this is clear for you all. Next, coming to spinning top. Okay, so here you can see that the price, this is the I will say this is the open. Okay, this is the open, this is the close, right? This point is the high and this point is the low. And for this one, this is the open, this is close. High and low remains similar for both bullish and bearish candle. Okay, so without studying the name, what this candle is signifying, there is equal buying and selling pressure in the market. This is a simple study of this candlestick because the wicks are similar. For example, the buyers have tried to push up the price, and at the same level, at the same time, the sellers have also tried to push down the price. So the price somewhere came to a bit into a middle and then settled. Okay, for this particular time period, say for this what will I say 5 minutes candlestick pattern. Okay, so this signifies this. So it indicates indecision and volatility, price consolidation on every trend reversal. That means why this candlestick pattern is forming here. This is because it signifies indecision, like the market can't decide whether it's a strong bullish movement or whether it's a strong bearish movement that is coming in the next time periods. And price consolidation means that price is moving, for example, an uptrend is going, okay, like this. So whenever the price is moving sideways in a particular range, say it's a resistance, it's a support. Okay, here it's a resistance and here it's a support. So whenever price is moving at a particular level like this, so it is known as price consolidation. Okay, so candles that have small body and longer wicks with wicks almost similar in length, and these are all the characteristics, right? These are all the characteristics. So color of the body doesn't matter if it is red or green. If it is formed at the end of downtrend, then it is considered bullish, and if it is formed at the end of uptrend, it is considered bearish. Okay, so now I'll be coming to a bullish spinning top. So what is a bullish spinning top? Signal sellers are less powerful and possibly reversal towards uptrend or consolidation. Okay, and what is a bearish spinning top? Signals buyers are less powerful, possible reversal downwards or consolidation. Here I want to mention something, that candlestick is only the basics of price action. Okay, price action is a big vast topic. It's not to be covered in a single day or a single month. It takes years and years of practice, hard work and consistency to master price action. But candlestick is only the basic or the base level thing that you need to learn to understand price action. Okay, because the market you can read the market, okay, or you can communicate with the market. You can understand what the market is trying to say to you by understanding the characteristics or the patterns of the candlesticks. Okay, so what is a bearish spinning top? It signals buyers are less powerful, possible reversal towards downward or consolidation. Now coming to the next pattern, okay, that is called a doji pattern. What is doji pattern? Very simple to spinning top, but has no real body. This is the basic difference. See, spinning top, you can see here a long wicks and a small body, and here in for the same doji pattern also you can see that long wicks and small body. But what is the difference? It has no real body. Means this body you can at least see here. See, you can at least recognize the body here, but here you can't. Very less body, like very almost negligible. Open price is almost a close. See, there is a difference between open and close right here. This difference is there, but in doji patterns you can't recognize the difference between open price and close price. And upper and lower shadow might be of different length. Okay, so doji pattern is also divided into two types. Number one is dragonfly doji. It's a bullish candlestick pattern, mostly seen in downtrend, indicates that buyers are strong, and when the price of a security has shown a downtrend, it signals an upcoming uptrend. Okay, so this candlestick, this dragonfly doji, is generally formed in the downtrend here, and then it signifies that the market can go up for a next period of time frame, right? So we i'm I'm telling you a simple trick by which you can understand that it is a bullish candle or a bearish candle, because candlesticks, when we learn every candlestick, it will be a bit confusing to understand which is a bullish or which is a bearish. So whenever you will see that a particular candlestick have a long shadow below it, like below the body, this is known as the body, right? This part is known as the body, right? So whenever a candle will have a long shadow below its body, understand it's a bullish candlestick, because it shows that the buyers are strong. And whenever you see that a candlestick have a long shadow above its body, this is the body here, above its body, that means understand it's a bearish candlestick or a red candlestick, because the sellers are strong here. The sellers are pushing down the price. Here the buyers are pushing up the price. So this is the basic difference. Okay. So a bullish candlestick of a doji pattern is known as dragonfly doji, and a bearish doji pattern is known as gravestone doji. Okay, and these are all Japanese names. These are all Japanese names, and some names are really funny. We'll come to know in the next episodes of this particular video. So bearish candlestick, this one mostly seen in uptrend. So a bearish candlestick will be seen in uptrend. Okay, like what happens when the market is going down and a particular candlestick is formed at the downtrend, like at the end of the downtrend, it symbolizes the uptrend, and this type of candlestick will be formed when the market is going up like this, and at this part it will be formed, which will signify that the market will go in a downtrend for the next period of time. So it is mostly seen in uptrend, indicates that sellers are strong, and when the price of a security has shown an uptrend, it signals an upcoming downtrend, right? Once again, so next coming to hammer and hanging man. Okay, I will suggest all of you to take a notebook or a pen, like with you, and note everything that I'm showing. Okay, write all these notes that I'm showing, all these notes, draw all these patterns. This will help you later. And if you don't do, there is no problem, because I'll share this PDF in the description below. It will help you to understand everything. So coming to hammer and hanging man. Okay, so it's the same candlestick pattern, but the bullish candlestick is known as hammer pattern and the bearish is known as hanging man. Same thing, you can see the open is here, the close is here, high is negligible, that is equals to almost close, and here you can see low, and this one, that's a hanging man. Here also the open and close is same, high is almost negligible, it's equal to open, and low is more. Okay, so you can say that here it's both are bullish, because the see the wick is the buyers are strong, it signifies buyers are strong in both the candlestick, right. So how it is different, this candlestick, this hammer will be formed in the downtrend, okay, and it will signify the market will go up for a short period, but this one hanging man will be formed in the uptrend here, that will signify that the market can go down for a certain period, right. So see, hammer formed at the bottom of a downtrend rally, and hanging man, it is formed at the top of a uptrend rally. Both indicates trend reversal to bullish and bearish respectively. See, I am showing you also in the chart, hanging man forming in the uptrend. I told you, see, market was going up, after the formation market is going down. Here you can see hammer forming in the downtrend, here the market was going down, and after its formation here, see, here its formation and the market goes up, boom, here it is formation here, see, market going up, boom, down. How to identify, this is very important, indicates by small upper body and long lower wick. See, no upper body, or if it forms also it's very negligible, and a long lower wick, right. Small upper body is important and long lower wick, right. Length of lower wick should be twice as much as length of the body. See, here the body, for example, if I consider it as x, so it will be almost 2x, right. And color of the body does not matter, maybe red or green, as per if it is formed in the downtrend it can be green, if it is formed in the uptrend it can be red. Okay, so the next and the last one for today's session will be shooting star and inverted hammer. Okay, so as you can see, it's a bullish and it's a bearish, both have long upper wicks and almost low equals to open or low equals to close, and very negligible low, if it is there also it's very negligible. See, you can see a very small lower shadow, see here, if you look this very closely you can see a very small lower shadow, but it is almost negligible. So if it is formed in the downtrend here like this, sorry my cursor is a bit probleming, just wait a while. If it is formed here, sorry, just wait. If it is formed in the downtrend here, and then the market can go uptrend, right. And for the shooting star, it will be formed in the uptrend, from where the market can go down, right. So a long upper shadow, which means the sellers are strong in both the candles, but it will be formed in the downtrend and it will be formed in the uptrend. Okay, so inverted hammer indicates end of bearishness, this one indicates end of bearishness, and upcoming uptrend seen usually at the bottom of downtrend. I told you it will be formed in the bottom of a downtrend. And shooting star indicates end of bullishness and upcoming downtrend. I told you it will be formed in the uptrend and it then a sharp market fall here. Okay, seen usually at the top of uptrend. Here you can see the similar thing. Okay, so a downtrend, its formation, and boom. Sorry, just wait. And then the market is going boom. And same thing here, it's an uptrend, its formation, and the market is going boom. So basically both the candlesticks are similar in nature. They have long upper shadows, which means the sellers are strong here, and negligible lower shadow, which means the buyers are not strong here, which will be which means it will be like, for example, it will a strong bearish move is coming, but it will be formed in the downtrend and it can form in the uptrend. Okay, how to identify both of them? They have small body and long upper shadow. Longer the shadow, more is the bullishness or bearishness. Okay, color doesn't matter, maybe red or green. So for today, this is all. I'll be attaching this PDF in the description below. Stay tuned to our episode of price action masterclass. I think this is the second video of the channel. We'll be posting more videos very soon, and this is just the beginning. I will teach you everything like price action, starting from candlestick patterns, chart patterns, indicators, Dow theory, Elliott waves, Neo waves, gap theory, everything that matters in price action, different type of indicators, strategies. Okay, all the names that you have heard: MACD, RSI, ADX, then Fibonacci, Bollinger Bands, Pivot, everything I will teach you. Just stay tuned to our channel and everything will be told to you. So thanking you, thanks for watching our video and thanks for subscribing also. If you have not subscribed yet, please subscribe our channel and please like the video, and that's all. Thank you all.